So let's get started. Today's topic, cryptocurrency and understanding the basics and the possible future. So with that, I think it's easy to get started with a little definition, but before I do, the disclosure is important in any of these educational meetings. This is not a forum for any kind of recommendation or investment advice or anything of that matter. This is totally educational only, informative only, and meant to be, as we said on the outset, educational and a starting point. There's certainly going to be many more meetings that we'll have next year. The history goes back, almost 16 years. But what I wanted to start out with is kind of definitions. There's a lot of them, you'll read about, you'll hear about. But this is, I think, the easier way to start. This is a combination of kind of Investopedia, NerdWallet. Cryptocurrency is a form of payment that can be exchanged online for goods and services. Analogy, you've done some transaction recently and you got to send Venmo. What's the big difference though? Well, the Venmo just tracks the dollar, right? It's not an investment, it's just a form of exchange. Many companies, and you'll hear me use a number of different companies as examples that are really embracing crypto as a form of exchange for goods and services. Subway, Microsoft, and Starbucks come to mind. So these companies are issuing their own currencies called tokens, right? A token is a form of cryptocurrency, but a little different from the technology of the computer programming. But the tokens basically are traded to purchase your Subway lunch, or you want to buy a Microsoft desktop. Home Depot actually has a token. You want to go in and buy a rake or some gardening materials. But remember, you need to exchange real currency to open up your crypto account. We'll talk more about Coinbase.com, which is the big website where people open up their crypto account. And generally, I think most people are buying either Bitcoin or Ethereum. Those are the two. Believe it or not, there's 15,000 forms of crypto. So what I would do in thinking of the tokens, think an arcade system, a casino, right? You're issued tokens, but you still have to give the casino currency and they give you the token. So the tokens, let's call that the currency that Subway takes, or Microsoft, Home Depot. Etsy is a big website that's now taking it. And then you need some kind of banking form, right? And that's where blockchain comes in. So cryptos use this technology called blockchain, and that's kind of the regulation. It's a little crude because, again, this isn't a fixed market like the New York Stock Exchange that opens at 9:30 a.m., closes at 4 p.m. Eastern, or the NASDAQ or something like that. This market is literally open 24/7, and it isn't a market that's regulated. It's really more of a market based on the computers and massive amounts of servers that are going 24/7. But that's the banking system, the blockchain. Some people argue part of that appeal is it's more secure, it's anonymous. I would argue I would prefer, a little more regulation. So now let's take a peek at kind of the timeline here. 2005, is the initial on record, I guess, Bitcoin. And, by all accounts, when you read the Japanese computer scientist, Satoshi Nakamoto, I hope I did his name justice, but he was supposedly the computer scientist that came up with this formula. Truly, he then developed a cryptocurrency, a form of computerization and algorithms, but then he realized he had to have some form of exchange, and that's kind of where Bitcoin came in. So Bitcoin has kind of been the primary driver of the form of exchange. Remember that there isn't a organized NASDAQ, New York Stock Exchange. There isn't an organized exchange that has internal buyers and sellers, and the price, say, of the Google stock or the Home Depot stock. This is literally, like I was just saying, a 24/7 algorithm that keeps spinning and going round and round. A couple highlights on this page. In 2010 was kind of the first transaction. 10,000 Bitcoins bought 2 pizzas. So what's that, roughly $20 for 2 pizzas? I don't know the exact price of a plain pizza, but so that means 5,000 Bitcoins bought a pizza. So 5,000 Bitcoins in that case was equal to around $10. That was a method by which that somebody finally could show a transaction. So you might have heard of this whole issue in 2014. There was a big Japanese exchange, Mount GOX, and it ended up going into bankruptcy. It shut down because they could not meet obligations. So I'm kind of building up to the point where it's become certainly a large market. It's only $3 trillion is the market cap that is reported as of yesterday for Bitcoin and crypto and all the different forms. To put it in perspective, the New York Stock Exchange is 31 trillion, and it's a little more consistent because you have obviously known companies, known entities. So going along this line a little more, in 2017, that Bitcoin traveled up supposedly on the value of 19,000. Let's take it forward here. As of yesterday, Bitcoin was about 49,000, what they call the share. And a year ago, it was probably more in the range of 22,000. So 22 to almost 50, that's a tremendous amount of volatility, which I would tell you that's kind of the word to remember as we go through this educational overview on crypto. Volatility is very important for people to understand. So we're getting into a couple different forms. Again, there are close to 15,000 types of crypto. I would suggest to you what you'll normally see are the first two, right? Bitcoin and Ethereum. You'll see a little more Litecoin, Dogecoin, Binance Coin. It's kind of almost like the flavor of the day, right? So, be careful. So when, basically the companies issue their tokens, I'll use Subway again, you go on to Coinbase.com, which is the largest website that you can open an account, and you put $100 in, and then that gets translated to whatever you want to purchase. Let's say you purchased a Bitcoin, similarly as you might do a transaction, in a brokerage account. And then the Bitcoin has a value on this 24/7 market, again, unregulated, unmonitored. You can see the speculation, you can see the crazy swings. 22,000 roughly a year ago and almost 50,000 yesterday was the price, quote unquote, per share. That's a lot of volatility. Again, we mentioned the blockchain technology is kind of the banking, if you will, of crypto. Now, talk a little bit, this has come up a fair amount in discussions on the topic, education. People are mining. What does mining mean? You think of mining, you think of somebody who's out gold mining, right? You think of the old, going back to the 1700s. Well, it's somewhat a form of that. The difference is this is computer mining. That little computer you can see on this overhead is called a graphic processing unit. The fancy way to say it is sort of a mini 24/7 computer that allows you to try to, I would say, try to understand the computer language of the cryptocurrency that's being revved every minute, on the hour. And what you're trying to do is beat the system, almost like a little bit of a puzzle. And then if you do win, you get credits for your win. Some of you might be listening saying, holy smokes, Dave, this is out there. This is pretty esoteric, and it is. However, the other day, there was a group called TeraWulf, which is a very well-financed group of Bitcoin miners. They purchase up to 15,000 of these server computers. So I would suggest to you what's really happening on the speculation side is, everyone getting in. There's a lot of computer science. There's certainly the retailers, maybe even your neighbor owns one of these GPUs. I wouldn't recommend doing it, but this is kind of where the evolution is going. So it's not only maybe your neighbor saying, hey, I'm into mining, I've been really getting some good wins on this, I'm guessing the puzzle. Well, that's great, but you're really only getting credits towards your account. So it's a random system, really built on a program that's within this GPU. But as I just mentioned, this big group, this TeraWulf, just bought 15,000 of these. And picture like cloud computing storage, if you've ever seen a picture online or you've thought about it, or maybe you have some computer background, that's sort of what these machines look like, and they're always turned on. So with that discussion about mining, let's look a little bit backwards here in history, because I think it's important to understand the method of exchange, which is really, I talk about what are the basics of crypto today and the future. What I see more of the future is, a form of exchange. I don't see replacing the dollar anytime soon. I just don't see that. However, I do see, as I mentioned to you, you got Microsoft, PayPal, Whole Foods, SD, Starbucks, Home Depot, known entities are getting their own tokens and allowing people to purchase goods and services. But let's look at history. I mean, bartering has gone on forever, probably still goes on in parts of the world, right? The farmer that needs to upgrade his hens or chicken population, has a lot of milking cows or beef cattle, is bartering and trading. That's been around a long time. Then the gold standard came in the late 1800s, early 1900s, but was kind of disbanded in 1930s, after the Great Depression, because the system realized, people had a valuable, say, ounce of gold, which they had to then exchange for money. But the problem is you could only have so much gold, right? Metal coins kind of came in around the same time. I mean, I'm talking metal coins that go back to 600 BC, when there's a lot of coins, if anybody's collected coins. I'm more talking about the 1700s in Philadelphia, when the minting of coins started. There's a lot of coins still in the system, but I can't remember the last time I get some of the exact change or something, right? With pennies, nickels, dimes, quarters. Then paper money came in. Why? Because you could keep printing paper. So that was around 1930s or so. That system came in, which exists today, currency, right? So we've had it today, where you can see the value of currency and the ability for the Federal Reserve to print money, right? The keeping liquidity in the market. So a very valuable form of exchange. I don't see that going away or being replaced, but certainly the plastic cards that came next, the credit cards, probably the first one big was American Express, probably around 1958 or so. They were first to market for having an organized way in which to buy something with an IOU. You had to pay at the end of the month, for sure. Then along came this small little company called Apple, right? Electronic money, Apple Pay. That's become big with the QR codes. They call them quick response. That square that you buy things with, that has all the little digits in it. That's called a QR. So that is pretty common now, right? You just hold up your phone and you make a purchase. But all of a sudden, this crypto thing came in, and these companies started issuing tokens. The difference, again, to take you through the steps, are what you're doing with electronic money, plastic, credit cards, paper money, any of those forms, is it's dollar for dollar, right? The exchange. The difference with the crypto is you're actually opening up the Coinbase account. You have to give currency. You can use a credit card, $100, $200 to open up the Coinbase account. But remember, then it will fluctuate based on whatever you buy. Let's assume you buy Bitcoin, and it's going to fluctuate based on the price of those values. That's the big difference, right? So if on Monday this week, you went to Coinbase, you bought $100, put $100 in the account, you transferred from your bank. Then you said on Tuesday, you bought the form of crypto you like, Bitcoin. And then by today, your $100 is now worth $120. In order for you to use that $120 to buy some supplies at Home Depot, you have to make cash out of it, right? You can't just go to the Home Depot with your digital wallet and tell them, oh, I want to buy these garden supplies. You have to show within the digital wallet the crypto has been made cash. So that's the difference, right? Because it's going to fluctuate a lot, an awful lot in the crypto, versus the Venmo is dollar for dollar. Plastic cards are dollar for dollar. Very busy slide. I put it up here to show you the evolution, I guess, of who is accepting Bitcoin. To a lot of us, you might think, it's really out there. It's kind of almost Star Trek, right? I mean, it really doesn't make sense, this whole exchange. And what do you mean the value goes up and down, and I have to open an account on Coinbase? And well, look, if you look around this map here, if you will, go on the top left, Etsy, which has become a very big exchange. It's not exactly, the same as an auction exchange, but it has, similar, people can go on and display their goods and services. So Etsy is accepting forms of crypto. Subway, I mentioned, has become a big user of that. PayPal is on there, Overstock. If you keep looking around, you have Xbox has become a big user, Microsoft. And then, up top in the right corner, charities are starting to accept this. So, of course, the idea again is with your Coinbase account, you are, increasing the value of what you put in, right? Versus the normal dollar for dollar transaction. That's some of the appeal, but you have to obviously watch it. If any indicator I gave you when we first started talking is a year ago, the tracking, if you looked it up, was around $22,000, if you will, a share. And now today, last night, it was 49,560. It is madly volatile, is an understatement. So just be careful as you think it through, as a form of exchange. Crypto as an investment, we've been talking back and forth a little about the values of it, the cons, what are the pros? It's accessible, it's liquid. But again, remember, you can't just go to, I'll use the other example, Microsoft, you want your home computer system, let's say it's going to cost $800. You're going online, you have to have turned that crypto account, the Bitcoin, into cash, and then you can do a transaction. So it is liquid. There is a market for it. The Coinbase generally is the largest one. The anonymity and the transparency, I would argue that's not a pro, but it comes up as kind of an advantage. You don't necessarily have to report the transaction. I absolutely believe that's where the US government is really walking cautiously on this, right? They haven't yet issued any. There is one ETF, I believe, called BITO, but other than that, and all of the large investment company names have asked for an ETF, the SEC has not said anything. I believe there's going to be a lot of pause on that until there's some kind of formal exchange. This is, I guess, the big traders, if you will, or people taking these risks. We certainly know Elon Musk is big into this whole area. Independence from central authority. Well, of course he likes that. No one's quote unquote really watching the transaction. High return potential. I think the far right are the things you really want to be concerned about if you do this, regardless of what level you do it at. If you open a crypto account, a lot of volatility, no government regulations. Transactions are final. You can't reverse when you make a purchase inside your Coinbase account, and you can't reverse it when you then make it to cash. You can't go in reverse. So be careful. In limited use, even though more vendors are offering to use it as a form of exchange, to me, limited use means you're not putting it in side of a certain investment account. A lot of nothing within any of the other retirement venues or those venues, you're not going to see any of that usage available. So moving on, how do you buy crypto? This is, intriguing to me because you're thinking of in the bottom right here, believe it or not, there's over 30,000 crypto ATMs. Someone told me that there was one down at the Citizens Bank in Quincy, Braintree area. There was a crypto ATM, not sure. But what does it all mean? So, there's a lot of these. I've seen some in airports. You're seeing some maybe within the Starbucks, as I mentioned. I haven't seen anything in Dunkin' Donut. You certainly see them in subways. In order to use the crypto ATM, you're not again going to put in your debit card. You may have a digital wallet card. I was talking to Anthony before we got on, and there is I think you mentioned what a USB that in some of the crypto ATMs you can show that, because again, remember the crypto ATM is assuming you have an established account, right? It's tying in with, say, the Coinbase purchase you did. So you need something to tell the Bitcoin ATM that you have an account. And then you need to obviously have the transaction go along the blockchain to the vendor, in this case, let's say Subway, and then makes the purchase, based on that QR. So again, a lot of different acronyms here that, floating around the transactions, but just remember, you still have to have a form of currency to open up your Bitcoin account or your crypto account. So there are the kind of the exchanges, online exchanges in the USA map there. There's really two very large ones you read about a lot, Coinbase, Gemini, but it's going to grow. And on the left side, you can see, the different payment methods. PayPal is accepting forms of cryptocurrency, but again, you need to show that you have an account. So interesting growth. I mean, no one would have thought, here we are really 16 years later, and we have ATMs, and it's not only US, it's globally, expanding. I show you this chart again, just information alone, but showing you what I really want to demonstrate with this from the investment point of view. The volatility is obviously almost unprecedented, right? I cannot think of anything in the 34 years of being around the investment business of anything that will show you this kind of volatility. So can't say it enough in terms of when you think about crypto, the forms of crypto, again, the most common, probably Bitcoin and Ethereum. Careful, careful, careful. That's an awful lot of volatility. What do I see as the future? The US government will get involved in this. The SEC, the Securities Exchange Commission, will definitely get involved. Does it replace the dollar? No. Does it compete with the dollar? That's a big question mark in my mind, because it isn't a uniform, acceptable market of exchange, and it's not institutionalized either. But stay tuned, because there was a recent approval. I think it was 3 or 4 months ago. There was an ETF approved. That's the second bullet there, called BITO. So that's a way, if you were curious, and you wanted to see a little more information on how something trades, follow that. Paying for things, I think the method of exchange is what's growing and making the US government realize this is not something that's just going to be here for the next 12 months and then gone. So I think the outlook is strong. The fluctuation of the market is the concern. The lack of formal market or formal exchange is a concern. But I do think that's coming as you have, some of these large goods and service companies, the Microsoft, the Home Depot, Walmart is saying they may get into it. The other day, I just saw a bank in New England, Mellon, is going to be a custodian for Grayscale, which is the biggest online exchange, Grayscale. So the real brands, if you will, are getting involved in the crypto, and certainly that's when the government takes notice. So I want to thank everybody for attending, hopefully what was a starting point for you in terms of understanding better cryptocurrency, the basics. Everybody stay well, and we will see you in 2022. Take care.